Aloha Big Wave Trading family. Following Monday's stock market session, about all you can say is or about all I can say, I should say, is I hope everyone listened. I hope everyone paid attention to why I was not happy with this uptrend after the initial leg from August to October. I have never liked this uptrend since that October, November, December, January period. I have had a problem with it the entire way, but really started to have a problem with it in December, especially January, and it can be best seen on this S&P 500 chart whenever it decided to take out the upper trend lines, especially in January. Didn't like it. Had a meeting with a friend explaining to him at this day right here following last Friday's stock market session why I did not like stocks here, why if I ran billions of dollars, I would be buying bonds and dumping stocks to buy at lower prices. Sentiment was extreme. While the market was getting parabolic, stocks weren't. That was the only missing piece of the puzzle. But everything was wrong, including my friend wanting to put all of his money in the stock market after a windfall right here. Since that meeting with that friend that lasted 3 hours, the market has done nothing but go straight down. Now, following today's session, I see a lot of traders that for some weird reason didn't heed my warnings, didn't position size correctly, and or didn't keep tight stops. I will remind everyone, try to find the last 5% recommended long signal with wide stops. You won't find any. I haven't had any since that August, September area. That was the last time any 5% signals were generated. There may have been a few here or there, but with tight stops, they didn't work out. And so I kept all positions the same size, 0.25%, 0.5, 1, 2%. A lot of those positions have now given me enough small nicks that now I'm down year to date. But once again, I like to see how I'm doing versus the market. And versus the S&P 500, I now have an outsized loss compared to the S&P 500. So while the S&P 500 is only down 1.10% this year, I am now down 2% year to date for full disclosure. But at the same side of it, the IWM, the Russell 2000, full of stocks that I normally go long, is down 3%. So it's not that bad. And from these ultimate highs here, I am now down right around 5% plus, while the market's down over 7% for the Russell 2000. So everything in perspective on an end of day basis, it's not that bad. I know some traders that bought SPY puts at the market open on Friday. They cashed out with 200 to 300% gains on these options positions on Friday. They did the same thing today, and it's a methodology that I've been studying. It's based just on the S&P 500 in the money options, or actually at the money options, using the exponential 10 and 20 day moving average intraday. It's amazing how much these options, the percentage gains you can make. But when you're on the right side, like the puts of these options the last few days, you almost have a combined 1,000% gain in these puts, while the market's only down 6%. So there's always ways to make money out there. But right now, on an end of day basis, there isn't a whole lot. Cash is king. I have another ton of sell signals left and right, left and right. I don't know if this market's going to continue to sell off, but I can tell you right now, this is where I like to start looking for bottoms. The VIX is up over 30, right around 40, almost touched it. I start to look for significant lows being put in at some time here or another. We could have another leg down, but overall, it's not that bad. And to confirm with the VIX, the IBD put call, total put call ratio, it's not the IBD put call, it's the total put call ratio, is at 1.10. That's near extreme levels. 1.20 is very extreme. A VIX over 40 is very extreme, but we're getting there. And I don't recommend buying falling knives, much less falling machetes, which is what these indexes look like. So I'm not looking to go long in bulk here, but my MO has been the same. That's why I kept taking long positions, even the extended ones. I warned everyone over and over and over that just because I'm trading the way I'm trading doesn't mean you should. My recommendation has always been 10 stocks, 10% of your capital, preferably going long the higher quality stocks priced above $10 that average over 100,000 shares a day, that are right at their 5, 10, 20, 50-day moving average, preferably in a perfect world, the 5 above the 10 above the 20, and price just anywhere near the 50-day moving average. That hasn't been the case in a long time. Most of these long signals have been extended from the 20-day moving average, and I've complained about it over and over and over. So if you went too heavily long here, I'm sorry that it happened to you, but consider these new long positions that you're seeing, informational purposes only. I'm letting you know what I'm doing because I personally like to always keep my toe in the water. A small percentage trade to me of 0.25% of my capital is still at least $1,000 invested per the trade with $1 commissions. I can be in and out for $2, take less than $100 loss, and I am fine. I know when to put 20% of my capital into one signal. I know when to put 10% into one signal. I know when to put 5% into one signal. I know when the odds are extremely stacked for me and extremely stacked against me. So right now, you take new long positions here, the odds are they're going to fail. But like I told you this weekend, if I do not take any of these long positions and they move 25% plus without me, I will be pissed. And on that note, from Friday's long selections, everything held up but CTSO. Now, LIVN lost its green bop, so half of my stops immediately go to today's low a day, and then I partial them up between all the green bop low a day levels, so it's just going to be here and here. So half's going here, quarters there, and a quarter there, and that's it for LIVN. And CTSO failed. That's your warning sign that new longs aren't working. But HBIO held up. CEMI held up, and while it's not perfect, they're not outright failing. If everything failed, then I would still take these new long positions I'm about to go over, but it would be even smaller. But that being said, not one single one of these long positions that you're about to see me take for Tuesday session is above 0.50%. I'm not putting more than a couple of grand in any of these long positions. I can't remember the last time I put more than $10,000 in any one new long position going back to, like I said, August, September. Everything's been under 10 grand or less for me per trade, and even here it gets smaller. So without any further ado, the new long positions are ESE, WTT, and CSPI. All are risky. ESE has earnings after the bell tomorrow. Nobody should trade this. I'm only putting a grand in here. I still have a position in ESE because even though Telechart shows that intraday it dipped below this low, it's not dividend adjusted. So I still have a position in ESE, but on an end of day basis, I have posted it as a full sell signal already, but I'm still tracking it. And that's why I forgot to mention, I'm still tracking even after today over 200 stocks in the stocks I am long section. That means I've either issued a full sell signal and it hasn't clipped all of my shares as a full sell signal, like Pixie, for instance. That was a full sell signal here, but only today did it cut me out of all of it. So on an end of day basis, I was still tracking it in my scan. On an end-of-day basis, FAF is a 100% sell signal today, but I never had a position. Still, since I gave it as a long signal, I was tracking it. So even though there's 200 plus stocks in the scan, I am not long 200 stocks. I was not able to get long all 200. But that being said, I'm still long about 100 still. That means I'm still long 100 plus stocks, and I'm still tracking 200 plus stocks that are still in overall uptrend since my long signal. How bad is it out there? Is the Russell 2000 below the 200? No. Is the S&P 500 below the 200? No. Is the Dow Jones Industrial Average below 200? No. Can they? Will they be in the short term? Maybe, probably. You don't know. We could reverse here or we can continue to sell off. But either way, it's not that bad yet. Now, if the Dow Jones Industrial Average, S&P 500, NASDAQ, and Russell 2000 get below the 200-day moving average, I will be tracking only about 100 and long only about 50. If even that, it's going to start. If we start pulling back more, the long signals, the end of day long, sell signals, excuse me, are going to exponentially explode. So with all that being said, consider these new long positions and ad signals information purposes only. I'm letting you know what I'm doing so I can keep my toe in the water. So then whenever it does start to warm, the water starts to warm, I know it's warming and I can increase my capital allocation per signal. If I'm completely out of the water and the water starts warming and I still get long signals and I tell myself, no, not yet, no way, it's not the bottom yet, and then the market starts moving higher like it initially did on me in 2009, I'm going to be pissed just like I wasn't myself in 2009. Now, luckily, I quickly was buying stocks again and fine, but the thing is that I didn't push like I should have pushed at the 2009 lows because I let my bias, even though I was trading for over 10 years, get in the way. That won't happen this time. A signal is a signal is a signal. So with that being said, here we go. ESE, new long signal, Earnings, everyone avoid it. Getting long, high day, 60-60. My cut loss level are these lows right here. They're all about right about the same. It's 59.35 right here. That's 59.50. Either one, if it goes below there, I'm completely out of ESE, 0.5% of my capital. Then WTT, this was in my perfect speculator scan. 2 pocket pivot point signals in 3 sessions with BOP growing each day. Supports right there. I want to get long. Limit order 229. First cut loss for me is 217. That's the only one I'm going to mention, because if you decide to play it, there is no way in hell you should still be long WTT if it trades below 218. That came from my perfect speculator scan. It was confirmed in my tertiary scan. ESC came from my CanSlim scan. It was confirmed in my price volume BOP and tertiary scan. Now, let's see, CSPI. This is from my perfect speculator scan. Extremely dangerous bullish reversal. I was not going to take it, but I looked at this move right here and was like, oh yeah, I remember not taking that move and watching it move up 25%. Different kind of tape. I still want to do it. Why do I want to do it? Because I want to get long at 16.18, and my first cut loss, it's right there, 15.44. Moves below 15.44, I'm out of a half of it for about a 2.5% loss. And then for now, I'm going to keep one deep final stop at today's low day. But let's say that you decide to play this. That's it. It goes below 15.43. Get the hell out. Don't mess around. I'm willing to mess around, like I said, to keep my toe in the water. CSPI was in my perfect speculator scan, confirmed in my green bot for 20-day scan, and also in my tertiary scan. Then HBIO, back-to-back signals, another above average volume, bullish intraday reversal, closing at where it opened, still with max green bot. Want to add to my position, 470, and then the one and only cut loss level anybody should be using is 440. So if it moves below 440, you should be completely out. Pretty clear cut. Me, I'm going to use that 440 level, and then I'm also, for now, like I said, if it doesn't move higher immediately, I'll be moving this stop up, but right below 410 will be my final cut loss. And then the final ad signal, confirmed via one of my members who brought it up to me, as I was like, watch there be a stock here and there, I wonder if there'll be anything. He said, take a look at this. We're long NTP, and we're getting a legit ad signal. Earnings are out of the way. We don't have to worry about that. Pocket pivot point signal, heavier volume, heavier BOP, candle over candle. When the market's down, this is up. That's positive divergence. If we've seen a low, this would probably be a stock that decides to explode higher. We'll see. It's a bad market, so if it fails, I will not be surprised. Informational purposes only. Watch and learn. It's not a time to be investing. If you want to put all the odds on your side and only invest when everything's right, now's not the time to trade. Me, toe in the water. Not my whole foot, not my leg, not my whole body, not diving in. Just my toes. Not even my big toe, my little toe. So NTP, adding 1330 limit, sell stop 1275. Goes below 1280, I'll be out of that ad signal. All right, everyone, I need to wrap it up here. I need to get going. I'll be back later on with a full written analysis, but I got to step away from this computer. It's going to be a long night of stop management, as I am still long way too many stocks. But if we reverse higher here, I'll be doing fine in the stocks I'm long that are still showing me gains, while everybody else will be like, damn, why did I panic and sell everything? It's not something we do at Big Wave Trading. There's no panic selling. There's no panic trading. There's only signals. There's only obedience to those signals in your stops. No emotions. Come at it fresh the next day. That's what I'm going to do. I'll see you in the chat room in the pre-market on Tuesday. Aloha.